Hello, beautiful minds, and welcome back to Boni's Life, the channel where we navigate the electrifying and sometimes slightly chaotic world of cryptocurrency with intelligence, insight, and just a pinch of humor. Well, September certainly lived up to its reputation, didn't it? A bit of a roller coaster that wiped out early gains and had some of us checking our portfolios from behind the sofa. The market shed a cool $162 billion in a week, reminding us all that the crypto curse of September is more than just a spooky story traders tell around the campfire. Bitcoin is barely clinging to a 1% gain for the month, while Ethereum took a dive below the crucial $4,000 mark, triggering a cascade of liquidations. But as I always say, where there's volatility, there's opportunity. The herd might be spooked, but the savvy investor knows that this is when the real work and the real gains are made. So today, we're going to dissect the week that was, peer into the week that will be, and arm you with the strategies to not just survive but thrive. We'll look at the technicals, the big events on the horizon, and what the titans of the industry are whispering. Let's get into it. All right, let's pull up the charts and see what story the data is telling us. Looking at Bitcoin, the picture is complicated. On one hand, we still have a golden cross formation where the 50-day moving average is above the 200-day, which is typically a bullish sign. It's like the market is trying to wear a tuxedo, but it's also got muddy boots on. The muddy boots, in this case, are the momentum indicators. The RSI, or Relative Strength Index, which is basically a hype-o-meter for an asset, has cooled off from overbought levels above 70 to a neutral 38. This tells us the initial buying frenzy has faded. More importantly, we're seeing a descending triangle pattern forming. For those new to the game, imagine the price is bouncing between a flat support line and a downward sloping resistance line. It's getting squeezed. Technical analysis textbooks tell us this pattern breaks to the downside about 2/3 of the time. The key support level to watch here is around the $108,000 mark. If that breaks, we could see a further slide. However, there's a strong floor of support built by the 200 period moving averages, sitting between $104,400 and $106,300. This is where the big money often steps in to buy the dip. So we have a battle playing out between short-term bearish pressure and long-term bullish support. Now, for Ethereum, it's a similar story but with a slightly different accent. It also took a hit, falling below that psychological $4,000 barrier. The technicals are also showing a sell-off, with the price trading below its short and medium-term moving averages. The RSI is also at a neutral 38. However, Ethereum appears to have a stronger support structure than Bitcoin, with more buy signals coming from its longer-term moving averages. Its key support zones are between $3,700 and $3,860, and then a major floor down to around $2,950 to $3,400. The resistance it needs to break is a heavy ceiling between $4,150 and $4,360. So the past week was a classic market correction. The question is, was it just a temporary storm or the start of a colder winter? To answer that, we need to look at the fundamental drivers, and the week ahead is packed with them. Let's pull up our calendar of market-moving events. First, in the crypto-native world, we have some significant project-specific events. On September 29th, we have the Institutional DeFi Mixer, an event focused on bridging traditional finance with DeFi. This is important because the big story of this cycle is institutional adoption. The more comfortable the suits get with DeFi, the more capital flows into the space. Also on the 29th, Jupiter is hosting a community event in Singapore, and Morpho launches its Machina Season 0. On the 30th, Horizon is launching its new mainnet, which is a major upgrade. These events can create short-term trading opportunities for these specific tokens, but they also paint a broader picture of a rapidly maturing and innovating industry. But the real fireworks might come from the world of traditional finance. All eyes are on the US Federal Reserve. We have FOMC meetings scheduled for October 29th and December 10th, and the market is pricing in a high likelihood of interest rate cuts. Fed Chair Jerome Powell himself has acknowledged that the balance of risks has shifted. Why does this matter? In simple terms, when the Fed cuts rates, it makes holding cash less attractive. It injects more liquidity into the system, and that money has to go somewhere. Often, it flows into riskier assets like stocks and, you guessed it, crypto. A weaker dollar is a stronger tailwind for Bitcoin. This is the macro environment that has the big players so excited. Beyond the Fed, we have a series of high-profile global economic forums. The World Bank and IMF are having their annual meetings from October 13th to 18th. These meetings set the tone for global economic policy and can have ripple effects across all markets. Any discussion around digital currencies or global regulation will be watched very closely. So, with this backdrop of technical consolidation and major fundamental catalysts, what are the experts saying? Well, some of them are incredibly bullish. Galaxy Digital CEO Mike Novogratz has said that if the Fed continues its path of loose monetary policy, Bitcoin could hit $200,000. Technical analyst Kamran Asghar has identified a pattern he calls a three-pump sequence that targets a breakout above $123,000 for Bitcoin in the fourth quarter. Even Eric Trump has chimed in, forecasting a parabolic move in the next 3 months. Now, I know what you're thinking. Boni, that sounds like a lot of hopium. And you're right to be skeptical. But these predictions aren't just pulled out of thin air. They're based on the confluence of factors we've been discussing: the post-halving supply shock, increasing institutional demand, and a favorable macroeconomic environment. We're seeing spot Bitcoin ETFs gobble up nearly 1,800 Bitcoin every single day. We have figures like Michael Saylor and Larry Fink, who were once skeptics, now leading the charge for institutional adoption. This isn't the retail-driven frenzy of 2017. This is a more mature, institutionally driven market. The wall of worry is being built, where prices climb despite a lack of retail euphoria. The crypto fear and greed index is still in fear territory, which contrarian investors often see as a prime buying opportunity. It's like a high-stakes poker game, and the pros are quietly accumulating their chips while the amateurs are folding. So, how do we play this? How do we translate all this analysis into a winning strategy for the week ahead? Let's break it down. This is not financial advice, of course, but a framework for how I'm thinking about the market. For Bitcoin, the strategy is one of cautious optimism. The key is to watch those support and resistance levels like a hawk. The zone between $104,400 and $108,000 is the critical support to defend. A bounce from this level, confirmed by an increase in volume, could be a good entry point for a long position, targeting the resistance cluster at $111,000 to $113,000. If we see a decisive break above $114,000, that could signal the start of the next leg up, and the predictions of $123,000 and beyond start to look much more realistic. On the flip side, a break below $104,000 would be a major red flag and could open the door to a deeper correction. In that scenario, a short-term bearish stance or simply waiting in stablecoins would be the prudent move. For Ethereum, the plan is similar. It has stronger support, so a dip into the $3,700 to $3,800 range could present a buying opportunity. Its first major test is to reclaim the $4,000 level and hold it. If it can do that, the next target is the resistance zone around $4,300. Ethereum's fate is tied to Bitcoin's, but if the market turns bullish, ETH often outperforms. Keep an eye on the ETH/BTC ratio for signs of strength. My general strategy for the week is this: patience and precision. Don't FOMO into pumps. Wait for confirmation. The market is waiting for a catalyst, and that catalyst is likely to be the news out of the Fed. Keep your event calendar handy. The old adage, buy the rumor, sell the news, is a classic for a reason. We know the rate cuts are likely coming. The market may rally in anticipation. Be ready to take profits when the official announcement hits, as that's often when the early money cashes out. And most importantly, manage your risk. In a market this volatile, never invest more than you're willing to lose. Use stop losses to protect your capital. Trading smart is more important than trading a lot. So, there you have it. The crypto market is at a fascinating crossroads. We have bearish short-term technicals clashing with incredibly bullish long-term fundamentals and institutional sentiment. The week ahead is packed with events that could tip the scales in either direction. We're watching for Bitcoin to hold its critical support, for the market to react to the upcoming crypto events, and for the macroeconomic picture to become clearer with the Fed's next move. It's a complex puzzle, but by putting the pieces together, we can navigate it with confidence. What are your thoughts? Are you bullish or bearish for the week ahead? What trades are you planning? Let me know in the comments below. I read every single one. And if you found this analysis valuable, do me a favor and hit that like button and subscribe to Boni's Life for your weekly dose of crypto intelligence. Stay sharp, stay curious, and I'll see you in the next one.